Good evening. I am Frankie Venter. I will be presenting the lecture this evening. Mrs. Antoinette Combrink is with me. Okay, so just perhaps to refresh, as we always do, you are welcome to always send us emails at our email address, mac4862@unisa.ac.za. Also, you are always welcome to make a consultation booking using the link that we have here. And then also perhaps in terms of websites, always just remember that I think you've figured it out now after test one, that you must use the CAS My Exam site, not the normal My Exams and not My UNISA. And this is our CAS My Exam site. Then also perhaps just giving the big picture where we are at the moment. We have finished with these various points already. The first 5 have passed already. Test 1, the debrief. We are now busy with the test 2 preparation lecture, which is unfortunately now already at the end of the Mac study week. But I'm sure that won't deter you from also continuing with your Mac studies. And unfortunately, the lecture is a bit late due to the Easter weekend falling within our study week, which is an advantage and a disadvantage. Perhaps you had some extra time to study management accounting, we hope, and you have lots of questions for us. And yes, so test 2 will be in May, 20 and 21 May. Then just carrying on looking at that. So it will be the management accounting test will take place on the second day of the tests on the Wednesday, 21 May, and it will be the second session. So you will be, after your financial accounting test, you will be issued your books. From 10:40, you can download the question paper and activate Iris. And then from 10:50 to 12 o'clock, you can write. So as you, just to point out again, previously there was a separate reading time of 10 minutes and 1 hour writing time. Due to SAICA doing away with this arrangement, we have now also just combined the reading and writing time. So you have a full 70 minutes to write. So you can start writing as soon as you have got your paper up on your screens, and that will then give you 70 minutes to write. So also then this now means you have 70 minutes for the 40 marks, giving you 1.75 minutes per mark if you would like to calculate the time allocation per section. Alternatively, if you prefer to first do some reading, then you will just have to use your reduced time to calculate your marks per minute, minutes per mark for your different sections of test 2. Any questions on this? Just to, I think there's a hand. Patricia, you can go ahead.
Hi, ma'am.
Yes.
Sorry, I think maybe perhaps the invigilators don't understand this thing of saying as soon as you activated your IRIS, you can start writing. I think maybe it's something that they should maybe clear that with the invigilators, because I saw that when we wrote test 1, they will tell us when we should start writing.
Okay, we'll make a note of that and give it through to the CODs to discuss that with the, I think some students also mentioned it after test 1 on email, that they were slow to start if they had problems with IRIS.
All right.
Okay,
Thanks
for pointing that out. Then just to come back to the big picture of where we are. So we are now, if you look at the competency framework, SAICA's competency framework, you'll remember the 6 capitals and strategy that we had here of test 1. we're now carrying on to the business activities. The inputs are now going into the business activities, and we are specifically looking at decision making now for test 2 topics. And these other topics, reporting, compliance, your auditing, your tax, are also all on this picture, but just to explain where we are now. Diving into that business activities block, it consists of stewardship of capitals as well as decision making. And we are specifically now looking at the first part of that, C1, performance measurement for management and other internal users of financial information, is what the SAICA heading is, but it consists, it's perhaps a bit generic. And as you'll see, we have a lot, it consists of a lot of things. You'll see these other C2 to C7 are the finance topics, and you'll be doing those for test 3 and 4. So just to remind you, so we finished with strategy in test 1. This green block, was strategy, and that was test 1. And we are now in the yellow block, learning units 5, 6, and 7, which is for test 2. And then the other finance topics will be in test 3 and 4. We've noticed that some students previously, up to 2023, test 1 and 2 were finance topics, and then test 3 and 4 were costing. But last year, we swapped them around to a degree due to the CA 2025 project and SAICA's new competency framework. So that is why things are now different. So some students that are didn't study last year are perhaps a bit confused, but don't study finance now yet. Wait till after test 2, we're now going to be doing costing. What is also different now is where previously costing was spread over 2 tests. It's now, all of costing is now being covered by 1 test, which is quite a challenge. And I know a lot of people are not so fond of costing. It's not their favorite topic, but don't worry, we'll get through it and just go through it step by step, and we'll see how we go. So then diving further into this yellow block now, you'll see that it consists of, the learning unit is called decision making based on variance analysis, but it consists of budgeting and standard costing. And here are the chapters in the Drury textbook. We are using the South African edition. So here are the chapters. Then we put in sub-learning unit 6.1, it's nature and classification of cost, variable and absorption costing, and activity-based costing. Then 6.2 is transfer pricing. Then in learning unit 7, it's basic. 7.1 is basically relevant costing with all its different types of relevant costing, and 7.2 is CVP analysis as well as decision making under conditions of risk and uncertainty. On this point, while we're looking at the competency framework and all the different learning units, I can mention that, as you know, the competency framework is still quite new, relatively new. And as it goes with these things, there's always developments and refinements taking place. So you'll be glad to hear, I think a lot of people, that SAICA has indicated that material mix and yield variances are now not required anymore. So that means activity 5.2 in learning unit 5 is not, the parts 2 and 3 relating to mix and yield variances are not applicable anymore. So we'll update the learning unit and take that out. Other refinements that are also on the way are that we have activity 7.7 in learning unit 7, which is about buying perfect information. That won't be asked anymore, so you can ignore that part as well. And we also have some references, but not examples, to decision tree analysis, and maxi-min, maxi-max, and regret criteria, which we'll also be just taking out when we load an updated Learning Unit 7. So just some notes there for changes that are coming. Any questions so far? Okay, then these are the topics that I hope to cover this evening. First, we're just looking at some exam technique or test technique, as we can say. Just recapping some of the nature and classification of costs. That's the fixed versus variable, long-term versus short-term costs. These are like basic things that always come through in various other topics. So, as well as, for absorption costing and variable costing. Then item 3, CVP or break even, we'll do an example of that. And number 4, relevant costing and outsourcing decision, we'll work through an example of that. Number 5, transfer pricing. So we'll go through some recap on each of these and an example, and then we'll take questions after each section. Looking at exam technique, just some basic things just to remind you: be on time at the venue, write the notes on the question paper as you read through it. Well, type the notes actually, and highlight those keywords and phrases. So don't just rush into starting to write your answer. You can make notes in your book, or you can in your answer script or on the question paper on your laptops. Read the required very carefully. That we often see students misinterpret don't read the required carefully enough and then answers incorrectly or miss part of the required and then lose some marks. So always read the required carefully. Once you've finished answering the question, just read it again to make sure you've covered everything. Stick to your time limits and attempt all sections. So don't go over the time on a certain section, even though you kind of feel, ooh, I studied this, I know a lot here, I'm going to write everything I know. Stop when you have reached the end of the time for that section and rather come back later if you have time. Stay calm and trust what you know. Always be positive. Stick to the basics. If it looks like you don't know anything, just try and think, what are the basic things that I do know. Start perhaps making notes, and then often the answers will come to you. Always, when you're practicing your questions beforehand, practicing questions is very important. You can't just read through the questions and answers of the questions that we give you. You must look through, actually work them out for yourself. Make notes of your errors so that when you are doing revision, you remember what are the things that you made, the errors that you made, so that you don't make them those same errors. Then in general, please don't use SMS style. Sometimes we see students writing, we are gonna do this or that. It doesn't look very professional, unfortunately. Handwriting, I know things get hectic, but stretch your hand and try and, if it starts cramping, and try your best to write neatly. It does sometimes help the marker to just have a better idea of what you are writing. And your presentation and layout, if you can at least just give an indication of what this calculation is and not just have a whole bunch of numbers, will help the marker and can perhaps give you an extra mark or two. Okay, then the first topic that we have is the nature and classification of costs. So 10 common mistakes that students make, which I think is important to always remember this. So it's got a lot to do with variable costing, absorption costing, contribution, gross profit, short-term and long-term, fixed and variable. So first one, forgetting to account for the fixed costs when using the variable costing basis. Sometimes students are so focused that they're now doing variable costing and a variable costing income statement, they completely forget to also include the fixed costs. Also, when you're doing your inventory valuation, if you're using a variable costing basis, the inventory valuation will only have variable costs, but the fixed costs are still an expense in the income statement. And the second one is when you calculate your contribution, students sometimes include fixed costs. So remember, contribution is sales less all variable costs. And related to that, regarding the variable costs, sometimes students forget to also include under the variable costs, the variable selling and admin costs. For example, sales commission. That's also a variable cost, even though it's not a part of the inventory valuation. When you're doing your break even, remember to include that in your variable costs for your contribution. Then another error is the students include gross profit when they're doing a direct costing income statement, or they include both contribution and gross profit when they're doing direct costing, or the opposite of that, they include a contribution line when they're doing an absorption costing income statement, or similarly, they have gross profit and contribution. So remember, your direct costing or variable costing income statement will only have contribution and not gross profit, and vice versa. If you're doing an absorption costing income statement, it will only have gross profit, not contribution. And then another problem, and especially with costing, students often cry to us and say, costing is terrible because we have all these milliliters and millimeters and kilograms and tons, and it gets hectic. So the conversions are very important, that you must know how many milliliters are in a liter, and how many millimeters and centimeters are in a meter. So not converting or converting incorrectly, or adding millimeters to meters or things like that. That is often something that is an easy mistake to make, but try to not make that. In the same vein, students often end up adding apples and oranges by adding, for example, monthly costs to annual costs, instead of having the same basis. All monthly costs must be added together, or all annual costs. Don't mix and match them. It's an easy mistake to make. Then, if you're doing an income statement, you must remember to include the opening and closing inventory. If you have to do an income statement, another error is mixing the product types in the calculation of inventory units, inventory values. So don't mix kilograms and liters and add them together and try and get a total of that. It's not going to make sense. Then splitting your mixed costs. So that's your high-low calculation. We like to ask that. So make sure you know how to do a high-low calculation and how to split it into the fixed and variable elements. And then if you have that split, and you have to do have to calculate the contribution, remember to include the variable costs. If you have to do an income statement, variable costing income statement, remember to include the fixed costs below the contribution line, omitting some of the variable production costs. Remember, sometimes students only have raw materials and labor, and then they forget to add the variable manufacturing overheads or something like that. And remember, the fixed manufacturing overheads have specific rules. You must know your absorption costing, how to do those calculations. And then I thought last year students were asking us for this, so I just included these into the slides as well. Some metric units of measurements, how many centimeters, meters, kilometers, liters, kiloliters, how to convert from one to the other, just for you to take note of. And here's also the weights, grams, kilograms, tons, as well as time. We don't ask time so often, but Sometimes, for example, for an ABC, it might be ABC question, there might be minutes, 15 minutes or 30 minutes for the cost driver applicable. Okay, any questions at this stage? Okay, then we can move on to the break-even example. So we're going to just look at dent out, which was an ITC question of January last year. Just to recap, very important to always remember when you're doing a break-even question to use the right formula. Try to use the most appropriate formula. So that will depend on what's asked and also what information you have available. So sometimes I won't tell you which one, but for example, if you don't have the costs per unit, then you would perhaps only be able to calculate the break-even in rand value, the revenue, the total fixed costs divided by weighted average contribution margin percentage. And margin of safety, remember it's expected sales less break-even sales divided by expected sales. Sometimes students divide by the break-even sales. And contribution margin is contribution divided by sales. Hopefully these all ring a bell from undergrad for you. Some other tips to remember. Quite often we'll ask a multi-product break-even question. So if there's more than one product and common fixed costs. So remember, when you have some common fixed costs, don't try to allocate those costs to the different products. Keep them together as a single fixed cost, and those fixed costs can only be avoided if all units are discontinued. And remember then that you have to calculate your weighted average contribution margin for your 2 or more products. Your steps are usually to first calculate your total fixed costs. And here, as we said on the previous slides, remember your fixed costs, your selling and admin costs are also fixed costs, which have to be covered. Those costs have to be covered before you will reach your break-even point. Calculate your contribution per unit for, if it's multi-product, for each of your products. Calculate the weighted average, and here you must use your sales unit mix. Use your planned or budgeted sales mix. Don't use the production units. Quite often we'll say it's the same, production and sales are the same, then it will be the same. But if you are given both, remember to use sales units for your weighted average. And only calculate one break-even calculation. Don't split your fixed costs into 2 and then calculate 2 break-even points. Then after you've calculated your 1 break-even point, if the question requires you to split it between the products, then you split it, and once again use your sales mix. And remember, with break-even, you must always round up, because you need to sell a whole unit to break even. If you round down, if you get 50.2 and you only say 50, then you will be slightly under your break-even point. That sales level of 50 units will not cover all the costs then. Usually it's about half a mark, but it's half a mark that's easy to get. Okay, then moving on to the example for dent out. So this question was interesting because if you read through the information, there's so many different directions that it can go in. So it's important to always try and remember which information you need and what are you going to be using once you've read your required. So in this example, it was a panel beating company called Dent Out, a brother and sister that run it. They have quite a few staff members, 30 staff members, and they've been growing steadily since 2016. There is a company called Regal Vehicle Rentals, or RVR, which is a car rental company that is interested in buying Dent Out. So this would make sense for them. So if they have a lot of cars that they rent out, obviously these cars often get into accidents and bumper bashings, and the cars are still drivable and repairable. So if they can have their own panel beating business to repair the cars if anything happens, it could save them quite a bit of money instead of going to a outside panel beating company every time they need to do some repairs. So then looking at the RVR is looking at another company, RideFin, which provides finance for Uber drivers. Now seems the Uber business has been declining a bit, so RideFin has repossessed quite a few of these vehicles that were driven by the Uber drivers, and so they are now sitting with a bunch of vehicles, and they are now interested in selling them to RVR to use in their vehicle rental business. However, some of these vehicles, they will sell them at a discounted rate because they're still in good condition and have recorded mileage of less than 10,000 kilometers. So RVR has now approached Dent Out to refurbish the vehicles so that they can use them for rental vehicles. And Marcelo, one of the owners, is eager to impress RVR so that they can perhaps get a greater valuation in their purchase negotiations. The contract for the refurbishment is for a period of 1 year, and they estimate that 26 vehicles will need to be refurbished, and they'll earn 25,500 per vehicle that they refurbish. So this question kind of looks like it's not just a straightforward break even. It's got some aspects of a limited time and almost like a special order aspect to it as well. So looking at the inventory that they have on hand, Marcelo saw that they already have quite a few of the items on hand that they would need for this refurbishment project. They, for example, have spray paint in their warehouse. There's the spray paint cylinders are 1 liter each, and they previously purchased them for 400 Rand per cylinder. It's used in their everyday business. The current retail price is 500 per cylinder, and each vehicle will only require half a cylinder. Then looking at the leather, they will have to reupholster the seats, and each vehicle will need 20 square meters of leather, and they normally buy it at a cost of 650 per square meter. So apart from the actual leather cost itself, there's delivery charges. The fixed delivery charge is 6,250 for 300 square meters of leather. If they have any additional leather, then it's 1,800 Rand for every 100 square meters or part thereof. So this is not a straightforward delivery cost. There's some tricks to it that we will have to look at. Then the other items that they will need to look at is the issue of electricity. I think this exam was written when load shedding was a bigger issue than it is at the moment, although it comes and goes, as we know. So Marcelo was concerned about load shedding, and one of the neighboring businesses had started leasing industrial generators. So he asked the salesperson to conduct an evaluation, and this evaluation was done for a cost of 1,500 Rand. And the salesperson suggested the Power Up 900. And if they accept the refurbishment project, they will lease the generator at 7,000 Rand per month. And that includes the fuel. Then labor, they will need semi-skilled workers to carry out the work. They can be hired at a rate of 300 Rand per day, and there will be 12 days of labor from one worker in total. This is for each vehicle. Looking at the required, which we should perhaps have looked at first, determine with reference to the percentage margin of safety whether Dent Out should accept the vehicle refurbishment project from RVR in section 5 for 12 marks. So remember when we looked at our formulas, when we recapped the formulas, margin of safety, if you need to calculate margin of safety, it means you need your break-even figure. So this implies that we have to calculate the break-even first to be able to calculate the margin of safety. So then remembering our steps, if we look at the solution, Remember the first step that we said, it's not a must, but normally we look at the fixed costs first. But you can, if you want to do the other way around, it's also fine. But in this case, we're looking at the fixed costs first. So remember, we said that you will need the generator. And this is like one of those things that students often forget, that it was 7,000 Rand per month. So we are going to be calculating it for the full period of 1 year. So you need to know how much the fixed costs are for the whole year. So that means we have to multiply by 12. Don't forget that. Then this is then almost like a special order or a relevant costing decision. So the power requirement of 1,800 Rand that was done, it's passed already. It's a sunk cost, so that is 0. Then the leather delivery charge. So it's not per meter, but it is for all the leather together. So that's why it's a fixed cost. It's part of fixed costs, not part of variable costs. So to determine how much you're going to be paying for delivery costs, you first have to look how much leather are you going to need in total. So remember we said there's 26 vehicles and it's 20 meters per vehicle. So that's 520 meters for which is more than the 300 meters that is for the first consignment. So we will be paying for the first 300 that delivery charge of 6,250 Rand, and then for the remaining 220 meters, it's now the 520 less the first 300. We will be paying, that works out then at 2.2 parts per 100, so which we have to round to 3 because it's per part of 100. So, and that's for 1,800. So we'll need 3 deliveries. 1,800 Rand times 3 gives you your 5,400. And then we can calculate the total fixed costs. So as you see here, in this case, it's not a multi-product CVP. So we won't be tempted to split it between different products. There's only one product, giving us 95,650 Rand. Then remember what our second step was, to calculate the contribution for the product. So we have only one product that we are having, and that is a refurbishment. So the costs per vehicle, the leather was a variable cost because it's 650 Rand times the 20 meters, giving us 13,000 Rand per vehicle. The paint, remember we said it's half a liter for a cylinder. Each vehicle will need half a cylinder, and we have to use the 500 Rand cost, not the 400 Rand, the 500 Rand purchase replacement cost, not the 400 Rand cost of the paint that's already in stock. So this is using your relevant costing principle here. So each vehicle won't use a whole cylinder, only use half a cylinder, so it's only 250 Rand per vehicle. Then the labor, 12 days per vehicle times 300 Rand per day gives us 3,600 Rand. Our total variable cost is therefore 16,850. The revenue we were given of 25,500. Therefore, the contribution is 8,650. This then gives us a break even if we take our fixed costs from the previous slide, divide by contribution, gives us 11.06. And as we said, we have to round up to 12 vehicles. So our break-even point is 12. So, and we're going to have 26 that we are planning on doing. So our planning expected sales quantity is over that. So we will be passing the break-even point. To calculate the margin of safety, therefore, we use the expected sales of 26 refurbishments less the break-even. If you want to do it very precisely, you can use 11.06 or the 12, which is also a correct way of doing it, which gives you 57%. So that seems like quite a high margin of safety. And yeah, they were saying there's also a extra mark if you included the stepped fixed cost. So the delivery fees were a stepped fixed cost. That's not one total amount. It was dependent on the quantity that was being ordered. Okay, so that is the end of this break-even question, which is incorporating some aspects of relevant costing as well. So you'll see it can be asked in quite a few different ways. Are there any questions at this stage about this question?
Ms. Venter, there's a student asking about if the break-even, when doing break-even calculation, and if it's always, the fixed cost must always be annualized. And I don't know if other students are also having this question, but in the required, if you go to, Ms. Venter, if you can maybe go to number 5, the last sentence, it talks about that we're deciding, I think, for 1 year. I think that was the leading sentence in that case. So I think
yes.
You need to be led by the information.
Yes. So the required can perhaps ask specifically ask you the break even per month or for a month. But in this case, the 26 vehicles, the whole project would be going over a year. And the required was asking if the project is acceptable. So that would mean it's for the whole year. So read the required, the information very carefully and the required very carefully.
I think so it's not necessarily for 12 months, but in this case, it was 12 months
yes.
because of the scenario.
A stupid question, ma'am. In plain English, what does it mean when we're saying that the margin of safety is 54%?
So if we say 57, it's 57%. So that means, so we are expecting sales of 26 units, or of, if I can call it that, 26 refurbishments. So it means that this 26 can drop by 57, let's just say 57%, and before we start making losses. So we are quite far past the break-even point. So if the project ends up with only 20, we are still safe. We will still make a profit on this project. But you could also see it, by looking, if you don't have the actual figures, but you were just told that there's a margin of safety of 57%, that is what you would know. In this case, because you have the details of the calculation, you can see that, you have 14 spare units that you can drop by. If you have to sell 12, but you are planning to sell 26. So that means you can drop by quite a few before you start making losses. So that, puts the company in a better position if there's a higher margin of safety. If the expected sales are very close to their break-even point, then they will have a very small margin of safety. And, that's then very a tricky situation for them, because they might end up, if there's a downturn in the economy, not in this specific question, but in a general break-even sales question, then they would have to be very careful that they are staying above their break-even point.
Thank you so much, ma'am.
Okay, you're welcome.
We have a student, Sandy Siwe. If you want to come
in. Evening, ma'am. How are you?
Evening, good, thanks. And you?
Well, thank you. I don't know if it's only me. I think maybe I'm not trying to teach you or show you how to do your work, but if you read the question and then you do the solution, that's actually what we do at home because we don't understand. Wouldn't it be easy for you to read the question and then when you're going through, then you tell a student, you need to keep an eye on this. If something like this is happening, you need to keep an eye on this, because just reading the question and then the solution is not helping us. We are here so that you can teach us what we're missing. And at the moment, I can read the question and see the solution, but I still don't understand at the end of the day. The minute it comes, I get the questions and then I don't even know where to start. I've got the formula, but then I don't know what to put together. So I'm not trying to be rude, ma'am. Costing is one of the ones that I'm really, really struggling with. And I just thought maybe if we could stop just reading the question and then reading the solution, maybe it would equip us better, because we are going to have the slides with us. We want you to tell us that, guys, if the question is like this and this is the information, this is where your mind needs to be. This is how you need to attack the question. And then with the exam technique, if I'm sounding a bit rude or anything, I do sincerely apologize. It's just that I really, really struggle with costing, ma'am, and I really need to get it right this year.
No, that's fine. We'll try to do that for the next question then.
Yes, and I think it's also, I think certain students prefer a certain method of teaching and other students prefer another method of teaching. But we do try and assist you in whatever way we can. And one method or preference for one student, is not, it's not the same for everyone. Everyone is a bit different, but we do hear what you're saying, and we'll try to address that. I'm sure there's no hard feelings for voicing your concern. Thanks.
Good evening, ma'am. How are you?
I'm excellent yourself. Please go
I am.
ahead. Thank you.
It's more related to the content. I just need clarity, because at the beginning of the lesson, it said, or was it Frankie? She said, we'll be doing costing all together right now. So after this class, we'll be done with costing for the whole year, basically. That's where I need the clarity.
Yes, not completely. So remember, this test 2 is costing. Test 4 will be covering the whole year's work. The main focus will be on the test 4 work, but there will be half of the test will also cover test 1, 2, and 3's work. So then you'll have to study costing again for test 4, and then in the exam, of course, there'll be costing again.
Okay, thank you.
If student Titus wants to come in at this stage, he or she is welcome. I don't know if there was a problem just with your mic, but otherwise I see no other questions. Ms. Stenti, you may continue. Thank you.
Okay, thanks. So now we can move to a relevant costing question. Relevant costing is Learning Unit 7.1. We'll be looking at the ITC of April 2021 question, where it was a question for 18 marks with 1 communication mark for 19 marks in total. So let's look at the information that was given. So this one is a group. Kubanda is a group that's already 5 years old. They produce fridges called Solar Cold, which is their only product, and they sell them at retail distributors at 4,000 Rand per fridge. They label themselves as proudly South African. The financial year end is 30 June. So in terms of relevant costing, we've got the 4,000 Rand per fridge at the moment. Then looking at what they use in their production for these fridges, there's several steps. The fridge has an external shell that's made from, perhaps we should just look at the required before we. So for this 18 marks, determine with supporting calculations whether the production of the fridge cases should be outsourced to Metalwork for the financial year ending 30 June 2021. So looking at this, it's a calculation question, and you, at the end of this calculation, you must know if a outsourcing should take place, and what is it that is possibly going to be outsourced. It's the fridge cases. So not the whole fridge, but only the fridge cases, and for that specific year. So let's read again, keeping this in mind now. So this will now tell you that it's a relevant costing question and an outsourcing or not decision. So let's now look for our fridge cases. So here we are reading about how they make these fridges. There's the external shell, which is made from inexpensive steel sheeting that costs 20 Rand per square meter and can be cut and shaped in 5 minutes. The external shell uses 5 square meters of steel sheeting. Kubanda had 500 square meters of this steel sheeting on hand at the beginning of the current year. So remember we said June 2021. So 30 June 2020 is the beginning of the year. It has ordered another 1,000, but it's not been delivered yet and they haven't paid for it. And all orders can be cancelled at a cancellation fee of 10% of the purchase price. So let's just read through it first. Then the inner cabinet is made from high quality thin stainless steel. They use 4.5 meters of stainless steel, which costs 40 Rand per square meter. They have 2,000 meters of stainless steel on hand, and it can be sold for 60% of its original cost because there's not a lot of demand. Both the inner cabinets and external shells are sprayed with white quick-drying paint. They have enough paint for 1 month's production on hand, or they purchase it from Charles Paints for 40,470 per month. And then after spraying, the inner cabinet is placed in the external shell and low-density foam is sprayed in the gap, and it binds them together. And then they have a cooling unit, a cooling system with a high energy rating is installed in the fridge. They don't have the patent, so they buy these systems from CS Limited, and it's specifically designed for their specifications. The solar cooled fridge is powered by solar energy, which is very handy, especially with load shedding. And it has 2 solar panels, an inverter, can power it for 4 hours, costs 1,650, and the delivery cost of 10 Rand. And then they have accessories, which cost 100 Rand per fridge. Okay, so then we have some information about the plant. The factory is in Durban. They have 2 sections, the metal processing plant and then the assembly of the solar set and accessories. The plant comprises the metal shaping and cutting and spray painting, and they have an unused metal processing plant purchased on 1 December, an amount of 2.5 million. So remember, in the ITC, these questions are often combined with tax and other modules or subjects. So when you're reading through and you know your required, you must always look at where the different pieces of information can fit in. So the different requireds. So we have the plant with 5-year life and residual value of 100,000. Then looking at the normal production of the factory is 2,850 solar cooled units, and the per month and the monthly costs of running the factory are 343,000. Then the breakdown of these monthly costs is the salary of the supervisor, salaries for plant operating staff, assembly staff wages, maintenance and consumables, rent and electricity. Looking at the note number 1, which is related to the salaries and wages, there's 1 supervisor and 6 staff members. There are 2 unsupervised staff members who assemble all the components. So that's the assembly. The employment conditions of all the staff members provide that if a staff member is retrenched, he or she must receive a minimum retrenchment payment. So remember, we're looking at outsourcing, so retrenchment can be an issue then. And then the machinery also needs regular maintenance. And if they don't do the maintenance and the edges are not sharp, there's a risk that materials can be wasted. And consumables relate to welding, pop rivets, screws, used in the metal processing plant only. So remember, we said there are 2 parts, and these consumables are for the metal processing plant. Factory rent amounts to 50,000 per month, and is allocated equally to the plant and assembly sections. So we said there's 2 sections. So it's half to the plant and half to the assembly. Lease agreement is flexible, can be altered to suit the needs of Kubanda. And each of the factory sections uses a fixed amount of 3,000 Rand for electricity per month. And in addition thereto, on average, the manufacturing of each solar cold unit consumes 20 kilowatt hours at 165 per kilowatt hours. So they have also considering the possibility of selling their plant for a cash injection. If they outsource parts of the production to Metalwork AG, which is based in Germany, Metalwork would quote them 350 Rand per fridge case. And in addition to that, it would require delivery cost of 3,000 Rand per batch of 1,000 fridge cases, and a minimum order size of 1,000 fridge cases. And they can supply up to 15,000 fridge cases per month. And this would take 3 weeks. And Kubanda would have to pay for the orders up front. So if they outsource the metal processes of the solar cold fridges to Metalworks, they can sell the plant for 1.74 million Rand. Looking again at the required, so the fridge cases if they can be outsourced. So let's look again at the information to see which is relating to the fridge cases. So the selling price is not really relevant to that. The external shell, so this is now where we are looking at the fridge cases. It's the steel, so it costs 20 Rand per square meter, so they can save on that. And it takes 5 minutes and 5 square meters for each shell. So that they already have this 5,000 square meters, and they've ordered the other 1,000 square meters. So looking at it from a relevant costing perspective, we need to consider if this is going to be relevant or not. And it would seem that this is now a cost that you wouldn't have anymore if you do outsource. You can save on this cost. Then the paint that is needed is relevant cost. The cooling system that they use in the fridges, that's now not part of what would be outsourced anymore. They will still need to do that and use those things. The solar panels and inverters and batteries, they will need to continue buying and purchasing those items to produce their fridges. It's not related to the cases, and the accessories are also not related. Then looking at the factory, the metal processing plant is where the cases are made, and the assembly, so that part they could close down if they stop making their own cases, but the assembly would continue, and the cutting and spray painting would fall away. So then also looking at these monthly costs, you would have to determine which parts are going to continue if they outsource or not. So the supervisor oversees the production process, so that is somebody that would still be needed even if they for the assembly, but the 6 staff members who operate the machinery in the metal processing part would then not be necessary anymore. So the retrenchment costs is a relevant cost then. The maintenance, so we then have to think in terms of if we aren't going to be having this machinery anymore, will we have maintenance? No, most probably not. So that is a saving that we can have on this maintenance and consumables. Note 2, the 17,980 per month. And then the factory rent, we said 25,000 for the plant and 25 for the assembly. But the agreement is flexible, so it seems we can then save on the 25,000 that we pay for the plant that we won't be needing anymore. And then the electricity as well, the 3,000 per month that we use for the plant won't be needed anymore, so that we could save on that. Then in contrast to that, so this is what we are using, but if we do go to the outsourcing, we'll be saving on those previous items, but we'll then instead of that have this cost of purchasing. There'll be 2 parts to it, the cost of 350 per fridge case, and then also the delivery costs. And if we outsource, then we will also be able to sell our plant for 1.74 million. So there's it's like a scale. You have to weigh the two different types of the different costs and savings of the two alternatives, either continuing with your own production of these items or of outsourcing and saving some, but then having this alternative cost. And that is what we have to determine now, which of these two is going to be the best. So looking at the solution with these outsourcing relevant costing questions, there's two ways that one can look at it, and it all depends on which one makes more sense for yourself. So there's the incremental approach, where you just look at the difference, the incremental costs or savings, or if you take the total approach, where you look at all the costs if you continue and all the costs or savings if you outsource. But the net of these two is what the incremental is. So you can either follow the total approach or the incremental approach. So we firstly are going to do the calculation on an annual basis. So we said there are 2,850 per month. Just go back there. The normal production is 2,850 units per month. And these are the monthly costs. So in annual terms, the annual units are 34,200. So if we outsource, we are going to be purchasing 34,200 cases for 350 Rand each, which means we will have an expense of 11,970,000. And that goes together with a delivery cost, which we calculate how many deliveries, seeing as it's in batches of 1,000, so we'll need 35 deliveries at 3,000, giving us 105,000 delivery cost. Then the question we can ask if we have, what will we do with the material that we have on hand? So I think there wasn't enough information given for that. So they awarded a mark just for considering that. So this is now all these were relating to the outsourcing. If we continue with production, we will have material costs of 20 Rand per square meter and 5 square meters. And that's for one fridge times the 34,200. Less what they had on hand at the beginning of the year. So that means their net cost for the year would only be 3,410,000. If they continue, if they outsource, they would have a cancellation penalty, and that was relating to the material that they'd ordered but not yet delivered or paid for. So if they outsource, remember they would then have to pay this cancellation fee of 10%. So that's where that comes in. Then the cost of the inner cabinets, if they continue, 4.5 meters at 40 Rand, giving us a cost of 6 million. And they can sell their existing stock at 60% of the value, so 80,000. So if they outsource, then they would sell it and they would have an income. So yeah, in the outsourcing column, these positive figures are the expenses and the income is in brackets. It's deducted. That's something we also find sometimes that students mix up the incomes and the outflows. So sometimes they calculate the income correctly, but they forget to show that it will be deducted from the costs. Then the paint cost is only applicable if we continue. If we outsource, it's not there. Then the cooling systems we said are irrelevant because it's not part of the cases related to the cases. They're going to be buying the cases now, but they have to have the cooling system, the solar sets and accessories in any case. So those costs are irrelevant. So it's always good to show that it seems that they didn't award a mark, but we often award a mark if you say that those are irrelevant. In the plant, the purchase cost is irrelevant. It's a sunk cost. The resale value, they are not taking into consideration. It's an opportunity cost. Depreciation is not a cash flow, so it's not relevant. In the supervisor's salary, we said, remember that the supervisor still has to look at the assembly staff, so you will have to stay. Yeah, students could have argued that if the supervisor is retrenched, there could be cost savings, retrenchment package, but I think the question wasn't quite so clear, so students could argue either way. And then the operating staff salaries, if we continue, we will have to pay them for the 12 months. Assembly staff salaries, remember assembly continues unchanged, so they are still incurred. So if you continue outsource, it's irrelevant. The retrenchment pay of the staff in the metal section is only incurred if we outsource, and the maintenance of those machines is only incurred if we continue, not if we outsource. Same with the rent. We continue, we pay the full rent. If we outsource, we're only going to pay half the rent. The electricity, and also remember here each time to multiply by 12, because those costs were monthly and we're now doing the calculation on an annual basis. So the electricity, if we continue operating and if we outsource, it's only going to be 36,000. And then the resale value of the plant, if we outsource, we have that as an income. So then you do your total net costs. If you continue, you're going to have costs of 13.428 million, versus if you outsource, you have only costs of 11.345 million, meaning it is, from a cash flow point of view, better to outsource because you'll have lower costs. So it's quite a long question, but one has to just keep track of, use the information that's given and take each one line by line, decide on each one. Is it relevant to this specific decision or not? Are there any questions on this question?
Ms. Spencer, there's a question in the chat that I'm busy typing, so I don't mind answering if it's okay with you. You can just maybe add what I've forgotten. So the student is asking, what is the incremental approach? So I think that's maybe a question that many of you have. So when you look at this calculation that Ms. Fincher has done, you have two options. You can either calculate the total for continue and the total for outsource, and then compare them with each other. Or you can do the incremental approach, which is a combination of both. When you do that, you must just make sure that you don't get your pluses and your inflows and outflows mixed up. But when you look at, Ms. Finter, if you go back to that screen that you were at just now, the last screen, you see here, we've got the continue and we've got the outsource. And if you take that total net cost and the total net cost of the outsource, it gives you the same amount that you then get at the bottom, that 2085 million for your incremental. So that's basically two alternative methods for calculating it. If you do the incremental approach, do make sure that you have the direction correct. Okay, so I think it's important that you practice if you want to do the incremental approach, or either way, whatever you decide to do, I think it will be great if you practice that. Okay, thanks. And Ms. Finter, I see a student hand raised. Mashudu. Student Mashudu, if you'll go ahead, please.
I just wanted to ask, I see, is the signs while you're calculating important? For example, personally, I would just say outflows are negative. So even though I know that the figure that I'm looking for is an expense, and maybe it's ideal to just work with positive figures, I'll still use negative amounts for outflows and positive amounts for inflows. And another question is, on the conclusion, I see they based it on the incremental cash flow, but for example, if one was to conclude that it is better to outsource because the total cost is 11 million, which is less than 13 million, which is the cost to continue manufacturing, was one still going to get that mark of conclusion?
Yes. So firstly, I would agree. You are saying the same thing. If you didn't follow the incremental and specifically calculate the 2 million, but you said the 11 million is less than the 13 million, I think that's saying the same thing, and I would agree that you can get the mark. Then on the question of whether it's positive or negative, we accept both ways. In this question, Saika was having outflows as positives and inflows as negative, but quite often we do our questions the other way around, like you are doing. And so as long as you are consistent, the marker will realize which way you are doing things and you will get your marks. So you do whichever ways makes more sense for you. You can continue doing that. And then also, so the incremental is just the net of each of these two. So for example, the electricity, if you continue, it's 1.2 million. If you outsource, it's only 36 million. So that means it's a saving. So in this column, the saving is the difference between the two. So this incremental is the difference between the two columns to the left of it each time.
Thank you, Ms. Venter. I see a student, Patricia, has a hand raised. You may go ahead, please.
Hi, ma'am. Can you hear me?
Yes, I hear you. Carry on.
Okay, I think my question was more similar to my Shudu's one, and I think it's been answered in a way. So what I wanted to say, for example, this incremental approach for me, I think it's a little bit confusing, so I would rather leave it for myself. But if I were to answer this question, then I'll just say option one, and I'm saying if I were to continue, these are the costs that I'm going to incur. And then option two, not to put it in comparison, because also when I'm looking at it in comparison, it's going to confuse me a little bit. But I will maybe first paragraph, I'll do continue. The second paragraph, then I'll do outsourcing. And then I'll compare the difference between my total cost from that first paragraph and second paragraph. And I base it on which one will be less costly for us to carry through.
Yes, that's fine. Yes, we've seen when we have asked these questions previously, students very often do that. First, do everything for the one and then everything for the other options using the total approach, but below each other, not next to each other. And then, then comparing this like 13 million to the 11 million. So that's fine as well.
What I think is good that the student or highlighted the thought for me is that when you're doing relevant costing, or you're doing comparison, you don't want to account for the same thing under both options, because then you're double counting it. So it's not a bad idea to do them separately and think of them separately. And that way you won't get confused and include the same thing twice. So I think that's maybe, if that's what you're used to, that's a good idea.
All right, thank you.
I see there are no more hands raised at this stage. You may continue. Thanks.
Okay, thanks. So now we're going to be moving to the next part, which is transfer pricing. Just to recap, normally the most commonly asked question that we ask is to calculate the minimum transfer price, but there is also a maximum. We can also ask for maximum transfer price. So remember, your minimum transfer price consists of the incremental cost for the goods that are being transferred plus any opportunity cost if applicable. So sometimes you will just calculate if it's applicable and then you might find that it's not, but quite often it is, and then you have to include it. And that opportunity cost is if there are sacrificed sales due to the transfer. So remember, the transfer is when you have two divisions in a company and the one transfers some of the goods to the other and also sells externally. Then if they, for the sake of transferring, they might have to sacrifice some of their external sales. And that is where the opportunity cost can come in. Then the maximum transfer price is usually the external market price, less any savings that might be applicable and on selling and transport costs. If there's no external market price, then usually the variable cost plus a negotiated profit. And the maximum negotiated profit consists of the incremental profit by the receiving division on the sale of those goods. And remember that the final transfer price is determined by negotiation and will be somewhere between the minimum and maximum price. So looking at our example, we're going to look at, this is part of a bigger question, the sponge division of the company manufactures or produces a raw dough, which it sells to its customers, to its external customers. 1 kilogram bags. And then there are two other divisions, the muffin and the cookie divisions can also be used by them with some additional ingredients. So they are making muffins and cookies, as you can deduce from the names. And each divisional manager has proposed a different transfer price if they were to then buy this raw dough from Sponge. So Sponge is going to be selling, and muffin and cookie are then possible buyers from Sponge. So it's always important to figure out who's buying, who's selling, and so on. And so Sponge has proposed a transfer price that will ensure that they reach their return on investment of 22%. So that is what's important to them. They want to still make sure that they get their ROI of 22%, while Muffin has proposed a full costs plus 18% markup, and the cookie division has proposed a marginal cost-based approach. And the market price is 28 Rand per bag. So it's 28 Rand per kilogram. So these three divisions, Sponge, which is the seller, has proposed a price of 28 Rand 90, which will enable them to reach the ROI of 22%, whereas Muffin, which is the full cost plus 18%, that they've calculated as 25 Rand 50, which is now lower than what Sponge is wanting. And Cookie, which is going for marginal cost, has got the lowest cost of 20 Rand 10. So we have three different opinions about what the transfer price should be. So this is now not a calculation question, this is a discussion question, and in which we say critically discuss the transfer price proposed by each division. It's now Sponge, Muffin and Cookie, and indicates reasons for the preferred price and the advantages and disadvantages, if any, of each proposal. This means you have to look at it from each of the three divisions. So you need to do three discussions for each of them. So looking at Sponge, they have the highest transfer price of 28 Rand. So this is what they would prefer, and they could even actually prefer a higher one to get a higher ROI. But in discussion, you can say that the market price, seeing as that the market price is 28 Rand, this is now above market price. So it's not reasonable and it's not fair to the other divisions, and they would in fact then rather just go and buy from the outside market at 28 Rand if Sponge is going to insist on 28 Rand 90. You could also take the opinion that the market price of 28 Rand instead of 28 Rand 90 is actually better, because it makes sure that Sponge prioritizes the work that is most beneficial for the company. And at this price, they would be in the same position as if they transferred internally or sold to externally. And the maximum price is actually the 28 Rand, not 28 Rand 90. Then looking at what Muffin and Cookie, things that are similar for both of them, they would prefer the lowest one of 20 Rand 10, because that would then make their profits higher and increase their chances of achieving the 22% return on investment. And the marginal cost-based price is beneficial for promoting goal congruency. It's best for the company as a whole, but on the other hand, it will demotivate. So it's good for the Muffin and Cookie, but it would be bad for Sponge, because then they now can't get the target of 22% ROI. And in the long term, this cost ignores the fixed costs that Sponge would be incurring, because it's only variable costs. So that's applicable for both of them. So Muffin's suggestion is now somewhere in between. So they already have a 18% markup and will give Sponge profit of 5 Rand 40. And that means they can cover their costs, their fixed manufacturing costs. So it's more reasonable for them both to be making a profit. But if there is spare capacity in the Sponge division, the market-based or cost-plus-based transfer price could lead to Muffin and Cookie to reject orders with a marginal benefit to the company as a whole, which is not good. Are there any questions about this last question?
I also don't see any hands at this stage.
Yes, so in this question, you just have to consider both what's good for the one, and so in this case, the performance measurement of the company, of the specific divisions, have been incorporated into the consideration of the transfer price. I think that's then the end of the questions that I was going to discuss. Are there any other questions about costing at this stage?
Ms. Venter, I see a hand raised. Student Gugu, please go ahead.
Yes.
Hi, good evening. Just a reminder as well from your sides with regards to what is scoped out as per the SAICA pronouncements that Ms. Venter mentioned earlier on. Are you going to send us a document perhaps on my UNISA?
Yes, we'll update the learning unit, and then I think we can do an announcement as well to say what we've changed, what we've taken out now, so that it's, it's clear what's, if you have perhaps already printed it, you can just delete those parts. Yes, thanks for the reminder.
Thank you so much.
Venter, there's another student's hand raised.
Ma'am?
View. Yes, please go ahead.
Can you please repeat the sections or principles that have been phased out again?
Okay. So the material mix and yield variances are now excluded. The other variances, like the sales mix and volume variances, are still included, but specifically for material mix and yield, which was part 2 and 3 of activity 5.2, and then in activity 7.7, buying perfect and imperfect information is now also excluded. And we just have mentions in the learning outcomes relating to maxi-min, maxi-max, and regret, and decision tree analysis. But we'll be taking that out. We won't be asking that. So it wasn't, and I think it was also referenced in the prescribed reading. So we'll take that out as well.
Okay, thank you.
Any other questions?
As a student, Correa, please go ahead.
Hi, ma'am. How are you?
Good, and you?
I'm good, thanks. I just wanted to find out if you're going to upload a question bank for test 2.
We don't have any extra questions at this stage. The question bank of level 1 is there, but just remember to exclude these. I think it contains material mix and yield variances, but not the other topics. So you can use that. I don't know, Mrs. Kombrink, if we...
For learning units, we did include the questions. We tried to cover everything so that, at least your bases are covered. Well, we can make sure that you've got last year's test 2, as that is always good to work out. Not sure if it's already there, but we can put that up for you.
Yes, it is there.
It is already there. Then what I think is important is that the questions that you do them well, and that you take the time required to do the questions, and that you don't skip ahead to the answer, because you need to practice your exam technique as well. Take the reading time, answer, and then take the time to mark yourself, because you want to learn from your mistakes and you don't want to repeat those mistakes. So I think it's very important that you make sure that the questions that you do them well. Then I think after you are done with the questions and you've done all of them and you've done them under exam conditions, then I think send us an email and we will look at questions that are also going to help you, because the thing is there's millions of questions available on these topics. But we know that there should be a limit to the number of questions that we avail for you. So the questions that we did include are the ones that we believe are important for you and that you need to do. But if you've done them and you feel like you still feel a need to do questions, please send us a mail and we'll do that on an individual basis, because we want the students to focus on the learning units before going to additional questions. So many students will then think that the questions that we load are the ones that we think is the most important ones. And that is not the case. The most important ones are the ones we believe we've already provided. So I hope that answers you, and you're welcome to send us that mail when you're done, when any of you are done with the questions and you feel the need for more questions, or if you're struggling with a specific topic, you can also let us know and we can assist you on that.
Okay, perfect. Thank you so much.
There's one more student's hand raised. Sharon, please go ahead.
Good evening, ma'am. I wanted to ask, in terms of tests, is it not possible for you to upload like the previous 3 years test twos, or the one that you uploaded is the only one that is adequate for us?
I think that is what Ms. Combrink alluded to, and also what I explained that previous year's test twos before last year, so up to 2023, they were covering finance topics. So previously, the tests, the costing tests, were split into 2 tests, and there was also 1 or 2 topics that have been taken out since we've changed to the CA 2025 competency framework. But perhaps, yeah, as Mrs. Combrink said, if you email us, we can look at which other questions we can give you to look at. So there's no exactly comparable tests except last year's.
Okay.
So the other tests were different.
Okay, thank you, ma'am.
I think there are no more hands raised at this stage. Ms. Venter, you can continue with your last slide.
Yes, so the last thing that we just wanted to say is that you can do this and try and be positive, even though it's costing and it's nobody's favorite, it seems. Don't give up and continue trying, do those questions, learn from each question, and we look forward to hearing from you if you have any questions and consultations. Thank you for attending.
Thank you so much.
Thank you, students. All the best for test 2. We know you can do it.
Thank you, ma'am.
you. Bye.
Thank you. Thank you.